Thank you for requesting information on Trion properties. We offer high net worth individuals the ability to passively invest in institutional quality, high growth commercial real estate. Trion, we are a vertically integrated real estate investment company, and we solely invest in multifamily properties. Multifamily is the industry term for apartment buildings. We currently own assets in California, Oregon, Colorado, North Carolina, South Carolina, Florida, and Georgia. And we typically buy deals around 50 to 500 units. And for us to acquire an asset, really there needs to be a very compelling reason as to why we're confident that we can really drive the net operating income and ultimately the value. So in commercial real estate, like most businesses, the value of the asset is really just a function of how much income it generates. So we try to acquire underperforming or underutilized assets in decent locations and then increase the net operating income and value through heavy renovations, rebranding the asset, and very hands-on management. So over the years, many of the properties that we acquire may be family owned for a number of years. They're very passively managed. In many cases, the building has just not been modernized, and it's just kind of an older, unrenovated property that's very passively managed. And what that does, that creates a perfect opportunity for a vertically integrated company like Trion to come in and really drive the value of the asset. So when we take over these properties on day one, we will implement institutional quality property management. So tenants can pay rent online, submit maintenance requests online. They can tour a unit online, sign their lease online. And then almost immediately, we will implement an exterior capital improvement program. So many of these 1970s and 1980s built properties are almost a very earth tone color, kind of like mud brownish. So we will immediately put a two-tone paint color on the exterior to try to bring the property to life. We'll also rebrand the assets. We typically will pick a kind of a trendy name that fits within the community. And then we'll also improve the amenities as well. So if there's the ability, we'll add a dog park. We will add barbecue areas. One of the properties I was just touring some investors through in the Bay Area, when we took that asset over, there was about 1,000 square foot room right off of the leasing office that was just being used as storage for the maintenance team. So we cleared all that stuff out, got a storage unit at the back of the property that didn't interrupt anyone. And then we converted that space into a very modern gym. So now it has a Peloton, it has treadmills, a weight set. So, basically space that added literally zero value now is a modern gym that gets a tremendous amount of use from the residents. And then as the units turn over, so if you have a 300 unit apartment building, in any given month, you may have 10 to 15 units free up. The residents are moving across town for a new job, or they're moving in with their boyfriend or girlfriend. So as that happens, we go into the units, we pull out the carpets, we'll put in a vinyl plank flooring that looks like hardwood. We will put stainless steel appliances in the kitchens. We'll renovate the bathrooms. And ultimately what we're doing, again, is just kind of taking underutilized housing in decent locations and converting it to more modern, attractive places to live. And by doing that, we are able to typically increase the rents the property can command, a couple $100 a month. And then again, we are a vertically integrated company, so we do self-manage our assets, and that enables us to control expenses. So again, it's that combination of increased top-line income and controlling expenses allows us to increase the net operating income. And we typically underwrite our deals to about a 3 to 5 year hold. And if we can, again, buy an inefficient asset, raise rents, manage it efficiently, and then over a 3 to 5 year hold period, increase that net operating income 1.5x or potentially more, then that translates to a much higher asset value. So what we're doing, it's kind of like your classic private equity play applied to real estate. Buy an inefficient asset, raise revenues, control expenses, that drives the income, which ultimately drives the value of the asset. And at Trion, we offer the ability to invest into a fund which will spread your investment over a pool of a well-diversified pool of 15 to 20 multifamily properties in the Western and Southeastern states, or you can invest directly into a specific deal. So, some investors like to limit the risk. They like the fund option. It's more like buying a mutual fund versus an individual stock. Others prefer to go directly into specific assets. And in our fund, we have set up a system of checks and balances as well. So we purposely outsource our fund accounting to a very reputable administrator named Verivest. So they are the ones that calculate the preferred return. They monitor our bank accounts. And then in addition to that, we get third-party audits from Armanino LLP, who's a large West Coast-based accounting firm. So they actually come in and audit the financial statements for every single property that our fund invests in. So, basically there is, I can't say there's not risk. There is risk. There's investment risk. A deal could underperform. However, we purposely created a system of checks and balances to basically make us Madoff proof. If something bad happens, it's not going to be because we did something shady. One of the other benefits of the fund is it does give you access to deals you wouldn't otherwise have the ability to invest in. So while we do offer the ability to invest directly in specific assets, we don't in every single deal that we buy. So in some deals, our fund will invest, and then we will partner with an institutional equity partner for the majority of the equity. So on deals like that, you can get exposure to the fund through the fund, but you would not have the ability to invest in it directly. And I think, one of the things that makes Trion somewhat unique from what I've found is we have nearly a 20-year track record. We were founded in 2005, and we've done, by the end of this year, it'll be over $2 billion of deals. And so we've demonstrated the ability to perform well in good economic times and in bad economic times. We've got this robust, nearly 2-decade track record. We've exited 49 deals. Of the 49 deals we've exited, we've averaged investor internal rates of return of over 30%, and that's an annualized return. We're not targeting that or promising that in the current environment, but historically, we have very clearly underpromised and over-delivered. So I say this, while we have this robust track record, we're still a young group. The two, Max and Mitch, the two owners of the firm, are in their early 40s. Myself and many of our other senior people are in their late 30s, early 40s. So again, while we have this robust track record, we have 20 to 30 years of runway ahead of us. So our goal at Trion, my goal leading our capital markets, is not to try to sell anybody to make a $50,000 or $100,000 investment. It's to hopefully build decades-long, meaningful relationships where we can mutually build wealth together. My name is Andrew Lucas. I'm the Managing Director of Capital Markets at Trion Properties. Feel free to contact me or book a phone call with me if you have any questions.